Hi, I am Rita Chidi, Forex coach and your guide today. In just 30 minutes, I'll show you exactly how to master Forex charts. You don't need to be a math genius or a market wizard. Just focus and let's go from confused to confident. Let's dive in. First, let me begin by showing you different types of charts. Now we have different types of charts. As you can see on my screen right now, this is called the candlestick. These are candlesticks. And the next one is the line charts. These are line charts. You can see it's in line form. And the next one that I will show you is also the candlestick, but different kind of candlestick. These are called high Kinachi candlesticks. Amongst the three, this particular candlestick is most popular. Now, what is a Forex chart? A Forex chart is simply a visual representation of price movement over time. The most popular is candlestick charts. This right here in front of you is a candlestick chart that is the most popular. Why? Because they give you detailed information like open, close, high, low, all in one candle. Each candle tells a story. Green or blue usually means bullish movement. Red or black means bearish. And of course, bearish means sell or short. Bullish means long or buy. Now, the time frame you select, 1 minute, 15 minutes, 4 hours, affect what the candle represents. Charts are the battlefield of Forex and candles are your signals. Time frames are crucial. If you're scalping, you may love the 5 minute chart, but swing traders, they thrive on 4 hours or daily charts. Now on my screen, you can see different time frame. This is a 1 minute time frame, 5 minutes, 15, 30, 1 hour, 4 hours. And when you click this icon, you will see different time frame. So the ones that have the yellow stars are my favorites, which is why you see them here. So here's the trick. Use multiple time frame analysis. For example, identify trend on the daily chart, spot entry on the 4 hours chart, confirm setup on the 15 minutes chart. This gives you precision and reduces false signals. So you start your analysis from the daily time frame and then you scale down to 4 hours and then you confirm your entry on the 15 minutes. This is called a top-down analysis. So you start from a higher time frame. In this case, daily is your higher time frame. 4 hours is where you see the market even more clearer. And on the 15 minutes, get your confirmation and then you execute. So this gives you precision and reduces false signals. Let's talk candlestick patterns, your first real language of price action. You know, if you have been following me, you will notice that I'm a big fan, I'm a firm believer of price action. Here are 5 most known candlestick patterns. So number 1 is bullish engulfing. That means trend reversal pattern. Number 2 is bearish engulfing. It means powerful sell signal. Number 3 is pin bar, rejection at key levels. Number 4, doji. It means indecision in the market. Number 5, inside bar. It means consolidation before breakout. So these patterns become 10 times more powerful at major support or resistance zones. Always use them with context. You just don't start attaching meanings to all this randomly. There are key levels. There are zones where once you spot them, they are effective. They are very, very effective. So support and resistance levels are zones where price reacts. So you may ask, what are support and resistance? Support and resistance levels are zones where price reacts. They are like psychological walls. So support equals to price floor. Buyer stepping. At support, buyers takes their trade. while resistance equals price ceilings, just like your ceiling. So sellers dominate over there. Support means where you enter your trade, buyers buy. Resistance means where you sell. When price approaches these zones, look for your candle confirmation to enter trade. I am going to give you example. The next thing I'm going to talk about is the trend lines and market structure. If you must become profitable, you must master market structure and in conjunction with trend lines. If you want to understand and know how to mark your market structure very properly, the link for the video will be in the description of this video. Go check it out because I treated market structure in details. So now, for you to be able to identify your market structure, you must know the trend of the market. So is it bullish, is it uptrend, or is it downtrend, or is the market consolidating? Because we have three types of market structure: uptrend, downtrend, and consolidation. So now let's talk about a trend line. Now, a trend line connects higher highs in an uptrend and lower highs in a downtrend. So for you to be able to use your trend line, and by the way, I have a detailed video on how to use your trend line. The link will be in the description of this video. Don't forget to go check it out. And by the way, do like this video, send us a comment, share it as well, and we'll be glad you did. Now, market structure tells you the flow, the direction of the market. Where is the market heading? What are we looking at? What are we expected to have? Now, there's what we call higher highs plus higher lows equals to uptrend. So when the market is breaking structures to the upside, it means the direction of the market is uptrend. But if it's breaking to the downside, it means downtrend. So lower highs plus lower lows equals downtrend. Once a structure breaks, it's a sign of potential reversal. So you have to combine this with a candlestick signal at resistance, and boom, high probability trade setups is in front of you. I usually do not use any form of indicator. The only tool I love to use is Fibonacci retracement. I as well have a detailed video on how to use your Fibonacci retracement. You can check that out in the link. The link will be in the description box below this video, so go check it out. And this class is one that will help you to get conversant with your chart. So now let me walk you through a real chart analysis step by step. So the first thing you need to do for you to begin to analyze any market is to identify the major support and resistance zones. So once you're done with that, the next thing is to look for trend line structure. Trend line structure. And then you wait for a candlestick signal. So then the last thing is for you to have a confirmation with either with your Fibonacci retracement tool or your psychological levels. And then the next thing is for you to execute. Enter the trade with stop loss just above, below the zone. So this is how pros do it. Discipline plus strategy equals to profit. So you just master the foundation of Forex chart in under 30 minutes. Now, the real work begins. Practice what you've learned. If you want to go deeper, join my advanced Forex trading class and DM me or click the link to join my free Telegram group. So like, share, and subscribe for more. See you at the top. See you in my next video. Bye for now.